Alrighty, everybody, welcome to my weekly Outlook webinar in the markets for this week. Thank you guys so much for being here. If it is your first time attending one of these live webinars, I try to do one of these every single Sunday for you guys to give you guys my personal outlook in the markets. My little disclaimer is that this is, of course, just my opinion. By no means is this any financial advice. This is just some education and my bias on the markets. Please don't be using just my analysis to trade the markets. Please make sure that you are using your own analysis combined with my analysis if you like it to be taking your own trades. But other than that, let's go ahead and jump right into it. For this week, let's start off by looking at the economic calendar. And this week, there is a lot of high impact events that are being released all throughout the week. I'd say our main key risk events for this week on Wednesday, we do have the FOMC meeting minutes being released in the morning. Also that afternoon, we do have the retail sales for the New Zealand dollar. However, it is a quarter over quarter reading, meaning a lot stronger than or a lot more impact than, let's say, a month over month reading. So this is a quarter over quarter report, so something to keep in mind. And then we also do have that following day, Thursday morning, we have second estimate GDP quarter over quarter for the pound as well. So lots of key risk events to be on the lookout for. There are also a lot of notable heads of central banks speaking. We have the European Central Bank President Mario Draghi speaking Monday morning, as well as, and he's actually speaking, looks like he's speaking twice Monday morning. We also have member of the Monetary Policy Committee for the pound that is going to be speaking. We have Australian dollar meeting minutes being released Monday morning as well. So lots of high impact news events all throughout the week. I think we also have Janet Yellen speaking at some point throughout this week. Let's see. Yellen. Yeah, so Tuesday afternoon, we have Janet Yellen speaking as well for the Federal Reserve for the US dollar. So we also have the Reserve Bank of Australia, Governor Lowe speaking as well Tuesday morning. So you guys can see lots of heads of central banks speaking today, lots of high impact quarter over quarter reports, and then a lot of high impact just volatility to expect with the dollar, but especially, of course, Wednesday morning with the meeting minutes. So that's something to keep in mind. Also, something I think I went over in I don't remember if this was on a private webinar with my premium members or if this was on a Sunday webinar that I did for free for you guys, but just something in case you guys are interested learning a little bit more about the fundamentals of the US dollar. The reason why I recommend focusing a lot of your education and focus into the US dollar is specifically because it makes up over 60% of the Forex markets. So if you can learn about what's happening with the dollar, you can learn how the rest of the markets move based on what's happening to the dollar. You'll also notice from a technical standpoint, the trades that, or the pairs that I trade, the currency pairs that I trade all have to do with the dollar. Just something that works well for my strategy. But this is just a little educational fun fact for some of you guys that want to learn a little bit more. If you want to learn about the FOMC, or if you want to actually read the FOMC meeting minutes, you can actually click on this little folder. We're, of course, on Forex Factory's economic calendar. And right under source, they'll have a little hyperlink to the Federal Reserve. Actually, you guys can see it. I have it bookmarked right here, FOMC meeting minutes. So you have to come in here, and I think you go to monetary policy. I think monetary policy report. No, let's see. Let me just see what I have it bookmarked as. Monetary policy. Oh, FOMC calendars. Okay, meetings, calendars, and information. That's where you go. And then I just have it bookmarked, so I usually just click on my bookmark, and then on this Wednesday, you'll actually, if you refresh this page at the time it gets released right here, let me circle it in black for you. You can, right here underneath the rest of the meeting minutes, you'll be able to click a PDF version or HTML version, and then you can actually go and read the minutes from that previous meeting. So the minutes being released this Wednesday is from the actual meeting on October 31st to November 1st. So you can click on the PDF just like this. So we'll do, for example, the last one that was released. It's a lot of words, guys, but it's very, very important information. They actually talk about a lot of relative things. You can actually see participants' views on current conditions and the economic outlook, which gives you all the different members of the Federal Reserve Board, their opinions. It also has, let's see, they have summary of economic projections. Usually towards the end, they'll get a little bit more into the nitty gritty, their projections, what they're planning on doing. So you can actually see right here the outlook for economic activity. So, for some of you guys, you might not care about this stuff, but for some of you guys that are wanting to learn a little bit more about the fundamentals and the in-depth side of Forex, and not just always just the charts, that's a really good place to go to, and it's really beneficial reading the minutes. Let's go ahead and jump into the technicals for the week, though. So starting off with the dollar index, my bias remains bullish on the dollar index. If you guys were attending our premium or our private webinars last week for our premium members, we talked a lot about we're going to remain bullish on the dollar index as long as price remains above 93.2. So if I pull this onto the weekly chart for you guys, we've talked about the 93.2 level for many weeks now. This has been a very, very significant level of support for price, and as long as we remain above this major key level at 93.2, I think we're going to remain bullish on the dollar index. Not to mention, if you guys can see both of the channels, I'll move it down onto the daily. You guys can see our descending channel that we've had, descending pattern with our channel since March, that we actually broke out of earlier this year, and that is when we went to our bullish bias, changed to a bullish bias on the dollar. And you can also see where the 93.2 level lies right here. We can also talk about, let's go ahead and remember the inverted head and shoulders that we have on the charts. So there's our inverted head and shoulders. We did break that neckline of this inverted head and shoulders. Long term, still expecting price to move up towards the 96, 97 level. So I'm going to be watching for price around the current area, but we are at a support area of this channel. I think as long as we remain above this current area of support as well as the 93.2 level, we're going to remain bullish on the dollar index moving towards 96. So that's my outlook on the dollar, guys. It is remaining bullish. For gold, we have been talking about this sideways moving channel for a couple of weeks now. We attempted to break out of this channel on Friday, but did not successfully break out of it. Again, if I'm looking at a bullish bias on the dollar, then my bias overall for gold is technically going to be still to the downside. I'm still looking for price to reach the 1250 level. I would not be interested in taking any positions on gold as long as price remains above this green level and above the current support in its channel. So for me to be looking at selling gold, I would need it to break this channel, maybe find some orders accumulating in the fashion of a bear flag, and then looking for a sell down to 1250. But until that happens, not interested in trading gold. Euro USD, I do remain in a bearish bias on Euro USD. So just a quick long-term recap. We've been in a bullish uptrend since the beginning of the year on the dollar or on the euro dollar until we broke out of that trend just a couple months ago, and we've been looking for sells on euro dollar ever since. Last week we saw a little bit of a rally in the beginning of the week on euro USD. You guys remember, I think that was on Monday going into Tuesday. We saw a pretty big rally in euro dollar. We tapered off that rally a little bit, and we also found some support at the top of this descending channel that we have on Euro USD. So still expecting downside on Euro USD, very similarly to the inverted outlook on the dollar index. As long as price stays Underneath, this is about the 118.90 level, 118.80-85 level. As long as price stays below that level, I'm going to remain bearish on Euro USD, expecting further strengthening of the US dollar. So outlook on Euro USD is still a bearish outlook. USD Swiss franc, not very interested in trading USD Swiss franc as I'd like to be bullish on this pair based on a stronger dollar. However, and we are also actually sitting at a nice long-term multi-year retracement. This is actually the end of last year, beginning of this year highs on USD Swiss franc. This is the lows of this year on USD Swiss franc. So we went ahead and fibbed that out, and we can see the 50% retracement level is actually holding up as a nice level. Oh, I don't know. Hold on, guys. Mouse is glitching out. Is holding as a level of support. So we can see that when we started to make this retracement, we moved up past the 50% retracement level, up to the 61.8% retracement level, and now coming back down to retest this area. I would like to look for buys higher up to the previous resistance on this pair. However, I don't like last week's candle close, or I'm sorry, last Friday's candle, the end of last week's candle close, having that really, really bearish engulfing candle, just completely retracing Thursday's gains. So not super interested in trading USD Swiss franc right now. A lot of my outlook right now is sitting on the sidelines and looking for these levels to hold, but we're going to be looking at pound dollar and pound yen very quickly. Pound dollar still moving sideways, inched its way up a little bit last week. We can see last week's daily candles inched up a little bit, but still overall sideways biased on Euro USD. Big bear flag with the channel that it's been moving in sideways. You guys can see I actually have an alert down here. I think that's exactly at the 130.50 level. So once price breaks through the 130.50 level, look for some sort of retest or accumulation of orders before moving lower. But if we don't get that support to break, we're just going to continue moving sideways on this pair. But long-term, still bearish outlook for this pair. Pound dollar. I've been looking for some buys on this pair, waiting to get the right confirmation for this pair to trade. We have not been getting that confirmation. We haven't touched pound yen yet for trading in quite a while. We've just been monitoring it as it is continuing to play in this bearish channel that we're in. But I just zoomed out, scaled the charts out a little bit so you guys can see what. I know some of you guys, I posted a zoomed in version of this picture in Telegram last week, and I had some of you guys messaging me asking what this green level was. So here it is. This green level, we can see our previous triple top that we made, and then our current near-term support. So this very significant support level where price is currently. I'd like to see a bounce in this area. I'd like to see some bullish confirmation. We almost got that bullish confirmation last week. So we actually had on this day right here, I believe, what is that? That would have been Thursday. We can actually see Thursday's candle just about almost closed. If it would have closed and engulfed Wednesday's candle, I would have been very interested in buying the pair, but we did not get that formation. This is something we actually talked about in the premium group. That's what we were looking at for confirmation to buy, because that also would have been a breakout. If you guys can see where this channel is, that would have been a breakout of this channel as well. So that would have been double confirmation just on the daily time frame, and also seen some support hold. If we would have seen that, we would have taken a trade, but we did not see that. So we stood on the sidelines. And good thing for that, because we did see, hold on guys, because we did see a small decline in pound yen, but it has yet to break that major support level. So I'm going to be looking for confirmation to buy this pair. We can also see how rangy it's been on the 4-hour. You guys can see there's that descending channel. It's respected this range quite well. So for me to be interested in buying pound yen, I would really like to see price come back up to our resistance and break above this resistance, maybe get some sort of bounce off of that former resistance and then moving up higher. But my long-term targets on pound yen do remain at retesting our yearly highs. So I think that us coming up to the previous, high 150, mid 152s, I think that's a start. We could close the year even higher. You guys know how fast pound yen can move in such a short amount of time. I wouldn't be surprised if maybe we close the year, at least saw price maybe get somewhere around the 153, 154, 155 before 2018. So going to be watching this, but my eyes are definitely on this pair. I think that there's some potential to trade it this week. Of course, do be very aware of the news this week. We did talk about a lot of pound news earlier in the week coming out. So we also have Wednesday autumn forecast statement. Lots of news all across the board for the pound this week. So that we have the second estimate GDP on Thursday as well that we talked about in the beginning of this webinar. So lots of things to keep in mind before trading any pound crosses this week, but just some pure technical price action to be aware of. Dollar yen, I'm going to remain. So we have remained on the sidelines with dollar yen last week, as specifically stated, as well as in the premium webinars. We have not been touching dollar yen. We have seen the 61.8% retracement level kind of be our line in the sand right now. Not interested in buying dollar yen until we get back above that area. We are getting to a pretty major level of previous support. So if we actually zoom in a little bit, and I'm just going to check out one thing right here. I want to go ahead and fib out the drop that we're in right now, see how far price is retracing. So around this previous support level is also about a 38.2% retracement level of the previous smaller swing on the daily that we see right here. So this could prove to be some support for dollar yen, but again, until we get back up to the 61.8% retracement level and break that, I need to see some accumulation of orders, maybe some sort of bear bull flag that would look very nice, and then looking to buy going in higher towards the end of the year. But for right now, again, I'm looking at the grand scheme of things. I'm looking at the more major long-term moves on this pair and just sitting on the sidelines. Overall, mostly because, of course, my bias is still looking for a stronger dollar, and seeing this pair drop while the dollar is dropping a little bit, but not quite as hard as the dollar yen is. So I'd like to see this pair move up higher with our stronger dollar bias. We have a couple questions in the chat room. Oh, what's up, Sheldon? Good to see you guys. Good to see everybody in here. AUD USD. This is moving perfectly with our price action, guys. If you guys remember last week, we did talk about our next level for AUD USD being the 95.60 level. We did see that level, that target reached yesterday. Just to outline again why we chose the 75.60 as a target for this pair. That was actually going to be you can see it's our extension level, our 161.8% extension level from the previous accumulation of orders from the previous bear flag that we formed on AUD USD. So we saw that target reached going into this week. I think that there is going to be some more opportunity to downside on this pair. I wouldn't be surprised if over the coming weeks, over the coming month or two, going into next year, we see a full 100% retracement on AUD USD. That's because I'm still looking at further strengthening of the dollar as long as that channel on the dollar index holds. I'm also looking at further downside on Euro USD as long as the current resistance on Euro USD holds. And so that being said, we know that AUD USD and Euro USD have a very strong positive correlation to each other. So we should definitely see a lot more downside on this pair as long as we see more strengthening in the dollar and downside on Euro USD, as well as just from a technical standpoint, there's nothing else holding it. There's no other major levels, retracement levels, in my opinion, between the 61.8% and the 100%. So just kind of has the opportunity and the possibility of free falling from here. And we could also, just one other scenario on AUD USD, we could possibly see either a accumulation of orders, just a little bit of a bear flag, some sort of consolidation before breaking lower, or we could see a big retest of this previous bear flag, this previous support level, which would now be resistance before going lower. But in my opinion, I think seeing something like this is a little bit more likely. There's a lot of momentum on this pair to the downside, as well as if we see the dollar strengthen, that could happen quite rapidly between now and them most likely raising interest rates at the beginning of next month. So that could just give this pair an opportunity to fall quite hard. And same thing with NZD USD. We've been pretty much on the sidelines for a while now with NZD USD, although we have been bearish. So if you guys remember last week's webinar and the previous week's webinar, and also if you guys are in the premium group for our live webinars that we do every Monday, Tuesday, Wednesday, and Thursday, we've been talking a lot about having a bearish bias on this pair. We talked about my bias is overall to the downside, so that has been following along with our bias, but not interested in taking a position or getting in a trade until we break below this green zone, which we just did at the end of last week. So just to recap what this green zone is, on the weekly, this is a major level of support, which was also some former resistance back in 2016, late 2016, early 2000, or actually looks like, I'm sorry guys, late 2015, early 2016. And ever since then, we just haven't been interested in trading this pair until we broke below it. One thing, I don't remember again if it was on the Sunday webinar or if it was on the premium webinars that I did last week, but it was mentioned at some point that I wouldn't be surprised if we saw the weekly candle on NZD fall quite hard and be very bearish. I think I actually drew it out, dropping down, doing something like that. And sure enough, we do see a big bearish engulfing candle on New Zealand dollar, US dollar, definitely breaking that major level of support. So this is actually a pair that I have on my sights for trading this week, just because the next level of support that we have is the 61.8% retracement level. So we're looking at a multi-year retracement level. So it's actually goes from the low of 2015 to the high of 2017. Just this whole correction that we've had, this whole correction we've had up, it's retracing how much of that has been retraced. So right now we just broke through, or actually last week we broke back through the 50% retracement level and now making our way towards the 61.8% retracement level. So on New Zealand dollar, US dollar, the next level of support that I think this pair will find, and my next target for this pair is going to be right around the 67 area. So that's a nice at least 100 pips lower. Something that I would be looking for is, because we just broke such a significant level of support, maybe look for some sort of retest or some maybe consolidation in this area, some just consolidation sideways, and then look for support to break, and then look for some downside to the 61.8% retracement level. Seeing this, you should be able to catch, a nice 75 to 100 pips on this trade, which again, we don't really care about the pips that much. We care more about the risk to reward ratio and the amount of the percentage that we're risking per trade. Because just as some of you guys know, you could have a 30 pip winning trade, and you can make the exact same amount if with a 150 pip winning trade. You can catch 5 times more pips and make less money than, something that you catch, a fifth of the pips on, 20% of the pips on, because it all has to do with your lot size, and your lot size is going to be based on A, what percentage you want to risk, but B, where your stop loss is. So depending on the size of your stop loss and how much you want to risk, that's going to be, be able to calculate how much you're going to profit. So we don't really care about the pips as much as we do the risk reward and percentage at risk of the account. So NZD USD still expecting much more downside. And USD CAD, finally, we're moving back up towards the upside. Wouldn't be surprised this week if we see some more upside in this pair, as we're expecting some more downside on AUD USD and NZD USD, which both tend to have a negative correlation to USD CAD. But we do have I could see some downside on this pair. We do have pretty. Not a perfect channel, but I'll go ahead and just outline just a little bit of a channel that we have trading on this pair. We are also at a major level you guys can see on the 4-hour. Let's just go back to the daily very quickly. You can see it on the daily as well. We do have a major level of resistance, and we did find some resistance back right here as well. And, last week we did kind of cap off around this area. So I think one of two things are going to happen in this area. We're either going to break this to the downside and find a sharp decline. This could be making a little bit of like a 3-wave pattern right here. This could just be our correction wave before moving lower. Or we may break this resistance, maybe retest that resistance, and then move higher. I think a move to the upside is more likely just based on dollar strength, but we know oil tends to have a very strong correlation to USD CAD, so it really depends on what oil wants to do. We saw a lot of strengthening towards the end of last week on oil. If we actually pull this back, we can see that the sideways momentum broke to the upside, which we were actually expecting a break to the downside. Just from a technical standpoint, we had a pretty nice flag that moved sideways. So downside would not have been surprising. Seeing upside is actually a little bit more surprising, but lots of talks with OPEC lately, lots of meetings have been going on talking about tightening oil, so that does cause tightening oil production, so that does cause a demand in oil. So it's not surprising to see the strength in oil, but if we do see more upside in oil, we're probably going to see some more downside in USD CAD. So I'd be a little bit adverse to trading USD CAD. I'm a little bit more interested in some of these other pairs. AUD USD to the downside, I'm very interested in, but more so this week in the premium group. If you guys are in the premium group expecting for some trades, or if you guys are connected to the trade copy or wondering what trades are we going to be taking trades on this week, most likely it's going to be NZD USD looking for some sells, Euro USD looking for some sells, and pound yen looking for some buys, depending on all of this is with a little disclaimer as long as price action moves in our favor. But those are going to be the three pairs that I'm probably most interested in this week. We'll see how well price action plays out in the rest of the markets this week. But other than that, guys, that is it for this week's weekly Outlook webinar. One announcement I did forget to say in the morning as well. This was announced last week as well, and it's been, I think you guys have known about it for a little bit over a week now, but on December 1st, don't forget, if you guys are interested in joining the premium group, or not a premium member but looking to become one at some point, our lifetime membership is going to be going up from $4.99 to $9.97, and our monthly membership is going to be going up from $69 a month to $97 a month, beginning, and these price changes are effective December 1st. The one question I've been getting from some premium members: if you are currently on the $69 a month subscription, you will not experience any price change. You are grandfathered into that $69 per month price as long as you're a part of that subscription before December 1st. But that's the only announcement, guys. Looking forward to a strong week. Junior says you're not looking at Bitcoin, BTC. No, I don't I don't look at these. I don't actively trade these. I don't day trade. These are just something I look at. I have a small investment in cryptocurrency, holding it for the long term. I don't. In my opinion, guys, I know that there are people out there killing it trading, day trading cryptocurrency, and that is awesome. Great for you guys if you are. But in my opinion, I think that cryptocurrency is strong, but I think on a smaller time frame, like day trading it, it's a little too volatile. I mean, a good example is seeing Bitcoin go from 8,000 down to 5,000 in a matter of 5 days. So we can see how volatile it is, which of course, looking at it from one angle can see that has the opportunity to give you some massive returns, which, I think is good. I think you should look at long-term for cryptocurrency. I think that's a very good space to be looking at investing in, but day trading it, not my cup of tea with how volatile it is. You guys know in the premium group, my kind of stop losses on an average trade, averages between, usually 10, 15 pips to 30 to 40 pips. So usually very, very small stop losses. And I don't think that I can afford to have good risk to reward trades, day trading cryptocurrency, without having a lot of high margin, which I know not every single person in my group has the margin to be able to be doing that. So again, cryptocurrency, I think in terms of long-term, good to invest in, the big ones, Bitcoin, Litecoin, Ethereum, that type of thing. ICOs are a different story, and day trading is a different story as well. But everybody has their own preferences when it comes to investing. Clark asks, do you see a Europe cross pair? Well, the only Euro cross pair that I trade is Euro USD. And again, expecting downside on this pair. We're actually seeing some pretty heavy movement to the downside since the market's opened. Just since the market's opened, it's actually dropped. Go back there. It's dropped about 60 pips, a little bit more than 60 pips since the markets have opened. So there's lots of downside potential. And it's moving pretty strongly to the downside. So just throughout the rest of this week, I wouldn't see if price came back down to be surprised if price came back down to like the 116, 115 area. So that is that, guys. Other than that, I hope you guys all have a wonderful week trading. This replay will be up to YouTube for you guys. If you're just catching the tail end of this, I did go over all of these pairs to the right over here, so definitely check that out. If you're watching the YouTube replay, or watching this replay on Facebook, please leave a like and a comment if this helped you out. I will see you guys. Also, you guys know I'm doing a lot of traveling. Just one small announcement too. I will be going to Australia on this Thursday. Going to be out there for a month or two or so, maybe a little bit longer, depending on how things go. So if you guys are in Australia, so I'll be specifically on the east side of Australia. I'm in the Gold Coast. If you guys are in the area and you would like to meet up, link up, probably going to be doing some meetups out there as well with some of you guys. So I will see you guys out there. But with the traveling, our weekly webinars are usually sometime between 8 p.m. Eastern time and 11 p.m. Eastern time every single Sunday. So I usually shoot for as close to around 8 p.m. Eastern time as I can. Sometimes we can get bigger audience at 11 p.m. Eastern time, so it just depends on the week. But other than that, I will see you guys on next week's weekly outlook. If you're a free member and premium members, I will see you guys tomorrow around this time for our first premium live webinar of the week. If you guys have any questions, please feel free to reach out to me, Slack, Telegram, Facebook, wherever you can get a hold of me. I will find some time to reply to you. Hope you guys have a wonderful week, and take care, guys. See you later.